Hi, I'm Rick Bensignor from In the Know Trader. This week we're going to take a look at how the US dollar index is trying to break out to the upside but hasn't been able to yet, and it's definitely putting pressure on the precious metals markets. So in conjunction with looking at the dollar, we'll also take a look at gold, silver, and platinum. Tune in.
This is a site and newsletter I started about a year ago in order to give individual investors access to some of the more sophisticated and accurate models that institutions use. Today, as far as looking at our agenda, I want to show you how the dollar is pretty much stuck in a range and potentially has a false breakout to the upside, and then how it affects the precious metals of gold, silver, and platinum. So let's get to it. Let's start with the dollar index. For those of you familiar with Tom DeMark's sequential model, getting to a 13 count often shows exhaustion of trend. So in 2017, the dollar index had a very clear 1, 2, 3, 4, 5 wave move down, bottoming into a 13 count. The brown ones are aggressive sequential, the red ones are standard, both giving downside exhaustion of trend indicators. A 9 count to the upside, 9 consecutive Fridays close above the close from 4 Fridays back gives you a temporary stall that went for months sideways. We do another 13 here, this time on the top, suggesting upside exhaustion. We pull back from that, and then recently, I think it was last week, we also got an upside exhaustion signal. And on standard sequential, we're actually up to 12, which means next week can get a standard sequential sell signal. That means anywhere from current price up to about 99.40 or so is still within the context of a potential false breakout and not a true breakout to the upside. And because of that, that's why we're seeing the metals really get stalled and can't get anywhere. But because there is some increase in the dollar, they've pulled back. Let's start off with a weekly chart of gold. So this major trend line here is the uptrend line going all the way back to 2008. So I started the low from 2008 and connected it to the secular low in 2015. Last summer's lows played with that trend line, held above. And again, we did a full 9 count to the upside, 9 consecutive Fridays, close above the close from 4 Fridays back to get us a top. We've now done the same on the downside. If you look at this up close, you know, everybody had noticed the head and shoulders pattern that had been kind of tucked in here. Let me just do a quick trend line. And the breakdown, or we could even extend it here, should have broken much further. But if I flip this and take a look at a daily chart, you're going to notice that we also got a downside exhaustion signal on the same bar that broke the head and shoulders pattern. And that's why I've cautioned people about playing the head and shoulders. Right now, gold's trading back above the neckline. It's holding its trend lines. I can't really get into the bearish camp with gold. If anything, I like it more from an investment point of view. Let's take a quick look at the silver market. Silver on a daily chart just posted a 13 downside exhaustion signal also. That gives me a reason to kind of be favorable towards silver. Still needs to get through some trend line resistance, but I'm more partial also to being on the long side of silver. And then finishing up, let's take a look at the platinum market. And this is platinum on a daily chart. We kind of like it longer term, especially how it bottomed, and I got a 13 signal here. We topped on the 13. That's where we got out of longs that started at 830. We had an average exit of just about 900 bucks. And in here, I'm kind of wishy-washy on what to do with it. So not really a bull or a bear here, but if I had to choose one, slightly bullish over time. That's a quick look at metals. My name is Rick Bensignor, and you've been watching In the Know Trader.